Let's shift away from the broader market and dig into a specific story we're seeing play out today in Uber. Investors there are kind of shrugging off this ruling out of the UK's top court around an issue we've seen raised many times, that their classification of workers as contractors over employees getting challenged and losing in that UK ruling, saying that it was wrong for Uber to classify at least 25 drivers as contractors. And Aikiko, I mean, this is something that you've covered quite a bit for us here at Yahoo Finance, and it seems to be a question that's raised in a lot of jurisdictions, whether or not it's right. Shares basically flat on the ruling, though, so I guess, and this is limited to just those 25 drivers, but it raises a lot more questions around how they should be classified.
Yeah, that's the key here, I think, in terms of investors shrugging things off. When you look at the ruling itself, it only applies to those 25 drivers. And also, it dates back to a case that began in 2016. And Uber has said that with all the complaints that were filed within this lawsuit, the company's already changed some of the services since the lawsuit was filed. And there's a number of issues here on the table. There's the issue of benefits. Uber says, look, we already provide additional benefits, including insurance. Also, the transparency available for drivers, whether that is making sure that drivers know where they're actually going on the trip and what the fare is for the booking. That's something that wasn't transparent when this case initially started, but now is. And also, drivers are not necessarily penalized for turning down the fare. So Uber's argument would certainly be that, look, things have changed since this ruling. Labor activists certainly, though, over in Europe, especially feeling a little empowered by this ruling, because there are a number of challenges that are happening across the continent as it relates to not just Uber, but the gig economy. It affects companies like Deliveroo, which is a competitor to DoorDash, a number of other companies as well. So the investor reaction probably as to be expected, just given how long this case is dragged on. But the key is going to be whether, in fact, this ruling is going to set a precedent for the way other European courts start to look at this issue, and that necessarily would not be good news for Uber.
No, it wouldn't be good news for Uber. And we saw that play out in California, too. They lobbied hard. You covered that for us. And it was an extreme amount of money that they spent. But they won that ruling in the way that that vote went. And so to see it play out in the UK, too, now, as you said, these are questions that have lingered for years, now getting some answers in jurisdiction by jurisdiction, case by case. But clearly an overhang for investors if you think about the costs to paying benefits and how they, both Uber and Lyft, stress that it wouldn't necessarily be good for their balance sheet if they had to. It's an important question to stay in mind for investors.
Yeah, no question about that. I mean, Uber, as well as other companies, have said that their costs are likely to go up if they have to reclassify their workers as full-time employees. And to your point, we did see in the initial passage of Prop 22 over in California a huge bump to both Uber, Lyft, as well as DoorDash, who poured in a lot of money into that campaign. So something that we will continue to watch, of course.